What's up guys, welcome to another free stock market breakdown video. In this breakdown, we're going to be taking a look at a few instruments where I see some trading opportunities brewing up. Remember to drop a thumbs up on this video and subscribe to our channel if you like the content. Also remember to turn on your channel notifications so that you are notified every time we upload a video. If you want to see more content, follow us on social media to keep up with our educational content and so you never miss any important market news. All the important links to our other channels are in the description below. Now I've put timestamps in the description below just so that you guys can toggle through the various instruments that we're going to be covering in this video at your will. And with that being said, let's get right into it. Now taking a look at the S&P 500, we can clearly see that price has been respecting this uptrend line since around the beginning of November. Now although I am starting to see some weakness creep into the trend at this point in time, it's still safe to assume that the trend will continue because, as we always say, the trend is your friend until it ends. And for now, I haven't seen any significant market sell-off to make me think that the trend is going to reverse for now. I do have specific entry points laid out, which I will share with you guys at a later date, that will indicate to us that the bear market has begun. So as you guys will know from some of my previous content that's on my channel, I am expecting some form of stock market crash to happen. However, as short-term traders, we do have to take advantage of the trend while it's happening, and in this case, the uptrend is the prevailing trend at this point in time. So my trade idea at this point in time would be a bounce off of around this 3,725 point level with quite a reasonable stop loss of maybe around 40 to 50 points and taking our trade up to the previous highs for around a 2-to-1 risk to reward ratio. So if we do find that price pulls back into this zone, then definitely I will be looking for a bounce and taking the trade back up to these previous highs. And essentially there is no major resistance up above this 3,822 point level, which we set as our take profit level in our initial trade that we took from down here and closed out when we did eventually hit this level. Now the fundamental reason supporting this long trade is the fact that the incoming Biden administration is looking to pass around a $2 trillion stimulus deal, and I am expecting the markets to react to it, especially if it does end up moving through the House and the Senate relatively quickly, which I do feel as though it will. And considering the fact that Biden will be inaugurated this week, I do think that the markets should have a positive reaction to this news, thus allowing us to either hit these all-time highs again or even surpass these all-time highs. But being high probability traders, we will take the conservative approach and take our trades up to these previous highs. Now moving across to the NASDAQ, as you can see, we are following a similar price pattern to the S&P 500, and so my expectations for this instrument are pretty much exactly the same as I expect for the S&P 500. So just like we noted in the S&P 500, where we did end up hitting our ultimate take profit level around 13,000 points, we are seeing some resistance up at this level, and we are still clearly within our uptrend line that we have been respecting for at least the past 6 months. So with that being said, I'm definitely looking for some form of bounce off of this 12,900 point level because that coincides with the daily 21 period moving average. It also coincides with this uptrend line, and it also coincides with a major supply and demand zone. And just like with the S&P 500, I'm going to be looking for us to take a long with a pretty tight stop loss up into the previous highs around 13,170 points. Now although the risk to reward ratio isn't as favorable as with the S&P 500, it is necessary to start taking a little bit more of a cautious approach as we are at a very risky point in this market cycle rally just because of the unemployment numbers getting worse and some other factors happening within the US economy that is contributing towards this ever-growing weakness in tech stocks right now. And of course, with the vaccine rollout, we are expecting some form of weakness to enter tech stocks, just as the market is expecting the world to get back to some form of normality and a lower reliance on these tech stocks, which clearly thrived during a stay-at-home or shelter-in-place kind of market. So definitely be wary about taking this trade, but this is the trade idea that I have highlighted in this instrument and is a pretty conservative approach, and I wouldn't be looking for any more points out of the NASDAQ other than what I've highlighted here. Now taking a look at the FTSE 100, which has been the lagging index of all the global indexes, we can clearly see that we have quite a significant development in this market. And overall, just because we're above the moving averages, the only thing I would typically be looking for is a long. Now, the primary price action pattern that I've seen in this index is that we have broken above this major supply and demand zone on the daily chart. As we can see, it's been respected on multiple occasions. I know that there was a lot of choppy price action in this area, and so although we are now above this major daily supply and demand zone, we do have to be cautious about some form of price action like this taking place, just because of how significant it has been in the past. But following the trend and what the trend is right now, the only trade idea to be taken in this index is a long, since we have completed this break above, the close above, the retest of the major supply and demand zone, and so the natural course of continuation is up to around this 7,140 point level. So what that trade idea would look like in actuality is to have an entry around here. I think price is trading slightly below our entry point, so not a bad thing whatsoever. I would definitely be keeping a conservative stop loss below this 4-hour supply and demand zone around 6,570 points, and the take profit level would be just below the 4-hour level that we've highlighted. So I'd be setting the take profit level around 7,135 points. So overall, we have around a 2-to-1 risk to reward ratio in this instrument. Now, although this is the technical picture that has been painted for this index, I must note that fundamentally speaking, this is not necessarily a trade that I would want to be taking, just given how dire this situation is with the pandemic in the UK is. I mean, the UK has gone back into another lockdown, and of course with the UK finally leaving the EU in Brexit, there are some supply chain issues that are arising in the UK economy. And so although the markets have been pushing up regardless of this news, and even after leaving the EU, the markets did continue to push significantly higher, I do think that any rally would be due to further vaccine news or some stimulus talks from the UK government, such as extending their furlough scheme further or injecting direct liquidity into the markets. Now, this may not necessarily be off the cards, just because we do have a statement coming from the Bank of England chair this week, and so I do think that any rally in the UK FTSE 100 will be after the statement by Governor Bailey of the Bank of England. So definitely something I'll be paying particular attention to, because as we know, in these kind of market conditions, we have to be very wary of what's going on, and any small amount of positive news could send markets significantly higher. But this definitely wouldn't be my first trade idea to execute of the ones that I have shown you so far. Moving across to gold, as you guys know, I have an extremely long bias for this instrument just based upon the severe money printing by the US government at the moment. Now, if you guys want to know a little bit more about how I feel about gold and all the reasons why I'm so bullish on gold, take a look at the video that I've linked in the top right hand corner of this screen. Now, with that being said, I do think that there are multiple ways to attack this trade idea. I do believe that because we have broken cleanly below this weekly supply and demand zone, the price could definitely continue lower, and obviously the lower the price goes is the more optimal our entry will be for our trade idea to the upside. Now, I'm taking somewhat of a conservative approach and will be executing my trade to the upside around the $1,800 level. Now, in regards to a stop loss, I'm going to jump up to the weekly chart just to give you guys a little bit more of a clearer idea of how my reasoning has gone behind my stop loss placement. So as you can see, we're currently trading pretty close to our weekly 50 period moving average. Now, I'm not under the impression that gold will break down below this 50 period moving average, and of course we have this trend line here that has been supporting price for quite a while now, and so I definitely want to have my stop loss below this trend line, below this supply and demand zone, and within reasonable distance to allow for any volatility that may happen if price does end up coming below this level. So to take a conservative approach, I'm going to have my stop loss around the 1710 level, which I think is a suitable place to have a stop loss when looking at a trade that will last for around a year at the minimum. So if you are a long-term investor and you are long-term bullish on gold, I highly recommend having one open position that's going to be open for a while, and then we will be able to hedge our position in between as price volatility and other trading opportunities open up within gold. But this is definitely going to be our foundation position, and my first take profit level for gold is going to be up at the top of this trend line here. And overall, this trade idea, even to the first take profit level, is around a 5-to-1 risk to reward ratio. But as I mentioned earlier, this is something that we're going to be in for quite a while. And obviously if price does come down below our desired entry around $1,800, then this will open up opportunities for a better risk to reward ratio. So I do encourage taking your longs below our desired entry point if you are able to. Now there is a possibility that price doesn't come down to the $1,800 level. However, I will reassess if that happens, and I will designate another entry opportunity if that does end up happening, just so that we can get involved in this trade. But right now it is 100% about optimizing our entry in gold. Last but not least, I'm going to be taking a look at oil, because as you guys are well aware, we did close out our oil trade that we did enter around the beginning of December of last year. So we were in this trade for around 1.5 months, and obviously it worked like a charm, and we did end up taking around a 3-to-1 risk to reward ratio out of this trade idea. Now I didn't expect us to hit our take profit level so fast. I did expect it to be quite a serious grind up. I was expecting to be into this trade till at least March, so we did end up moving a little bit faster than expected. But now that we have hit our take profit level, it's time to reassess exactly what could happen with oil at the specific point that we're at right now. And to be quite honest, because of how aggressive this move up was, I am expecting oil to have somewhat of a pullback, and as a result I have shifted my bias for oil to a short one. Now the reasoning behind having this bias shift is because we are trading up against quite a significant level of supply and demand in this instrument, and so we've already started to see some weakness creep into oil as we have pushed down from around $53, which was our take profit level, down to below $52 already. And with this start of a rejection in this instrument, I'm going to drop down to the 4-hour time frame to highlight the entry opportunity that I would be looking for if we are to take any shorts in oil. So the first thing to note is that we have a clear supply and demand zone right here, and essentially any breakdown below this 50 period moving average will indicate a short trade opportunity for us to take. And in order to be conservative, I will be looking at taking profits around this level, which lines up with another significant supply and demand zone, and will be around $49.50. So overall, we could be looking at a trade idea that gives us around a 2.6-to-1 risk to reward ratio, and to me that's pretty good, especially for a short-term trade idea. Now the fundamental principles backing up this idea is obviously the increase in restrictions in Europe. In addition to that, we're also seeing airlines start to cut back on the number of flights that they're doing, and we are seeing quite a substantial shift in the amount of people who are purchasing electric vehicles over gas powered vehicles in 2020, and I heavily expect that to continue into 2021, and I do think that this will have in the short term a significant impact on the price of oil. And with that being said, this brings us to the end of our stock market breakdown video. So thank you to you guys who made it to the end of this video. I'm going to be doing a lot more videos analyzing instruments specifically, and I will have a video coming out later this week covering my prediction on the impending stock market crash that I see happening within the next 12 months. So in order to make sure that you don't miss out on that video, ensure to subscribe to the channel so you keep up to date with all the content that we're going to be bringing. If you found this video useful, remember to drop a like on the video so that the YouTube algorithm helps us reach more people. Thanks and peace out.